Traders, it's 8 a.m. Chicago time on Thursday, the 29th of April, 2021. This is episode number 1983 as we barrel our way to 2000. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, I'm sure you can all see that we are pushing through. We've pushed through. We have what is risk on sentiment in the overnight session, as shown here in the Convergent Trading pre-market summary sheet. The S&P is trading higher, along with the Nasdaq, Russell, and the Dow. The Euro Stocks 50 are higher, but the DAX is taking a bit of a beating this morning. This on the heels of Apple, which had outstanding earnings yesterday, huge profits on big revenues, and on the release of the FOMC and having that behind us, the Fed is still supportive of economic growth, and of course, President Biden introduced a $1.8 trillion plan yesterday to the joint session of Congress. So it's all good news, I guess. We're trading at 42.05 in the S&Ps with a high of 42.0850. Currently, 160,000 contracts have traded. Pretty good volume in what is a P-shaped profile overnight. We'll look at that in a minute. But the risk on assets are all higher except for the DAX, with the bonds weakest, down 20 ticks. The Bund down 48 ticks. The yen off. The 10-year notes off 9 big ticks. The euro is off, and the U.S. dollar is off. Again, allocation is clearly to risk. Silver is now trading July 2021. If you're following the futures, the front month is now July silver. So that's that. Again, 160,000, 162,000 currently for the S&P. 99% of the overnight inventory is long in the S&P P-shaped profile, and we have about a 25-point range. Right now, the point of control at 42, looks like 42.04 quarter or so. So that's where we stand overall. Earnings today, we do have a few. We've had MasterCard, Altria, which used to be Philip Morris, Comcast, Northrop Grumman. Already, all of them surprised to the upside, with Comcast surprising 31%. No surprise there. Really, everybody's sitting at home using their internet. The United States Steel is expected after market. That's a $3.6 billion, $6.8 billion estimated revenue for the quarter. And Gilead is also expected after the close. The big ones are mainly behind us. The big tech players are mainly behind us so far when it comes to earnings. So that's where we stand on that. And in terms of what's ahead, we already had also GDP growth, which was really outstanding, 6.4% versus 6.3%. GDP price index, also a lot higher, 4.1% versus 2.8%. Initial claims came in line, about 553,000 versus 551. We still have pending home sales at 10, Feds Quarles at 11, Feds Williams at 2, and then this evening, NBS manufacturing PMI out of China. So that's that. Let's take a look at what was expected yesterday versus what we got. Yesterday, the primary expectation was looking for the market to drop into the 4175 area, right in here. 4175 area and pop higher, hold sideways, and then from there, the FOMC, the secondary is a push through the 4185, 75, and then failure back into the middle, and then from there, it's the FOMC. Here's what actually happened. Bit of a messy chart. We got the drop to 4176.75, was again expecting 4175 right here of 4176.75. And then we also got the lift through 4185. And then it comes back and checks 4175, goes back to 4182.50. Supply still strong in this area. Yesterday, we saw it again and again and again this whole week. Lots of supply. In fact, we just saw a nice little sweep here in the S&Ps right there. Look at that little sweep there, and immediately taken back by the market. We've been seeing that a lot. Those look like hedges to me. It just seems like there's a gamma or delta hedge that's being put on. But we saw that yesterday again and again. And then ultimately the FOMC occurs right in here, and then the rotations start to increase. So from here to here, that's pretty much everything that happened pre-FOMC. And then from here on out is everything post-FOMC. And you can see how the volatility comes in. We get many more bars, which is the advantage, in my opinion, of having a Renko chart. It shows where the opportunities are a little bit better than a time-based chart. There are others, volume-based or tick-based, and range charts, PNF charts do the same or similar thing. But we could see that the opportunities, as I talked about yesterday morning, it's best to keep your powder dry and be prepared for after the FOMC, because that's when the real moves occur. And it doesn't mean we have to trade the FOMC announcement. That's not really what I'm after. Not after getting into that the FOMC move, although the FOMC had move 1 right there, 2 right there, and then 3 right there. And if you recall from yesterday, I put it on here. This 1, 2, 3 move, very common in the FOMC. It generally, not always, generally the bigger move goes in the direction of the first push, and we're looking to get on that continuation move later. This happened to dip down deeper, but it is what it is. So we ended up with a relatively balanced profile yesterday. We did extend higher, and we did have an excess high yesterday. Looked like a pretty secure high right here in K period. Pretty secure high before it rotated down. That high is not likely to be taken out for the rest of the session. And of course, we did take it out in the overnight session, and with the progression of the day and earnings. The delta was negative all day yesterday, despite this push higher. Yet again, we got these persistent aggressor sellers on the way up. As we're pushing higher, you could see that the peak in delta occurred much earlier. If I can draw a straight line, the peak in delta occurred much earlier, and as it made a higher high, the delta was lower. And to me, it just seems like there's just a concerted, continuous effort to sell into strength, but the catch here is that the strength is not backing off. It's still lifting prices, but the market, we're seeing it on the tape all the time that, as we push higher, there's just sweeps down, sweeps down, sweeps down. We had 2,500 the day before yesterday. We had 1,840 yesterday as one contiguous order that swept the book. And we're seeing that continuously at all-time highs. This, of course, is a very unique environment. Here's what's happened overnight. Overnight, we open right up and we run it directly higher. Um, we run it directly higher, and we end up creating a P-shaped profile, a short covering type of environment where we push higher, and we found balance up here between 4207.50 and 4200 with a point of control 4204. So we're just balancing out here. This is where the value area is. We've got a gap up this morning. Gap rules apply. It's very important for us to wait just a little bit on the open, just a little bit, unless you're scalping. Wait just a little bit on the open to see if the gap gets reverted. In other words, we find sellers coming in to push it back towards yesterday's range, or if it pulls back a little bit and then we push the overnight high, in which case we would target 42.19 above. As we are pausing right on top of the projected measured move here at 42.0650. So that's where that stands. I agree, you have to be cautious reading into the delta. I don't really, it's important to see, but I can tell you that when delta and price move in a directional way, trades are much, much easier. Trades flow more easily, targets get hit more easily. The delta does not govern price. Price is first, and then volume supports or hinders price movement. But price is price, and it does what it wants, right? So that's where we stand. So we've got this balance at the top. We're opening in a gap, and there's not much more to say about that than that. We could see the nice separation in VWAP and mid, and it's below. The VWAP remains below the overnight point of control. There's room, in other words, to the downside for movement, and that's what I'm looking for first thing today. A quick look at the order book on Edge Pro X here real quick, just to see what's above and what's below. In looking below us, not much there. I mean, not much there until 4190. We don't see large blocks. We don't see heavy prints or heavy bids anywhere. There is some in the century figure right here, as we would normally expect, but there are no large blocks sitting there. We see a little bit of a large block here at 4202.50 on the bid, but really nothing to speak of. And then above, there isn't all that much to talk about until 4220. The picture changes slightly once the market opens, of course, but this is a large block that is likely to trade out. This offer is likely to actually trade rather than pull. So, not much to say in terms of the heat map. We're snaking around this measured move confluence that has basically is very close to marking the overnight high, and we're holding steady right in this area. 4208.50 is the high in the overnight session. So let's move on and look at the expectations for today. Now, again, I'll reiterate that I'm not a huge fan of these all-time high type days. It's a pain. It kind of curbs the range and volume as we sit here. But overall, we're looking for gap rules today. The expectation this morning, open auction out of range. Looking for it to be responsive. Expecting it to pull back to 4,200, consolidate, poke through. Then I'm looking for the impulse, and the impulse is what's going to trigger the engagement, trigger that basically set it so that we can take on risk, and then look for the 4208.50 to get squeezed, and look for travel to 4219, 4220 up here before we stall out. Let me turn on the stock zones. So that's what we're looking for here. Sorry, I had to cough there. Secondary, If we get a responsive gap, which I'm not sure. I mean, it's all-time highs. If we get a responsive gap, then we're likely to poke through 4208, take that out, and then move into the overnight point VWAP, and then drop through this 4200 area and start moving towards 9375, consolidate. And then there's a vacuum here. If you remember those the string of singles from yesterday, those K period singles right there, those are likely to get filled all the way down to 4189.50. So I'm expecting this to slip through to 89.50 right down here. That'll be the big target. So if we break into 93, then we have about 4 points, 3.5 points of room to the downside before we see a potential reversion into the close. Those are the two primary scenarios. Again, gap rules apply today. Give it time, give it 15, 20 minutes at least to see which side is likely to take over. If we get an impulsive push higher, then we have a gap and go situation. Otherwise, if it looks weakish, then we'll target yesterday's high at 93.75, 94, 4,200 before that. Okay? Good luck.